Hello, everybody. Senior Capital here. Happy New Year to you all. With Amphipod Crypto. Just going to go over, mainly want to focus today on different altcoins that we're looking at, both specifics as well as looking at some of the narratives that we think are building going forward. Obviously, key points in the cycle now, so we're going to discuss where we think we are and how to attack it going forward. How are you getting on, Amphipod?
Yeah, very well, thanks. Happy New Year, everyone. Yeah, Christmas was good, but it's over now. It's time to get back to work, really. And I think now is a really important time to get knowledgeable about the different crypto projects and what's going to do well in the future.
Yeah.
We need to kind of be ahead of the game. So
I think that's the key point, and it's the key thing I've learned from prior cycles at this stage is it's so easy to switch off mentally.
Yeah,
especially going forward the next year. It's okay now, been beaten up for a year, or we might, some alts will get beaten up for another year. So you got to keep mentally strong and keep like you said, keep focused on the end game. So maybe the best way to start is if we look at like a long-term Bitcoin chart and just sort of set the stage with where we think we are, and we can debate that because we may have different opinions. I'm not sure.
Mm-hmm. Yeah, go for it.
If I share my screen, is that shared there?
Yeah.
Right, let's move this bad boy out of the way.
Yeah, I saw this chart you posted.
Yeah, I'll see what you think. You may agree.
A bit of a cough.
Yeah, it's all good. I think everyone has this time of year. So I mean, all I've done here is obviously drew some similarities between all the different cycles, and we can argue, is this time different or not? But it's really uncanny. I mean, you can actually copy and paste both cycles, and they seem to overlay so well. Obviously, this is basically assuming there's a 4-year cycle, so we top at the end of 2025. We've got the halving here in 24, April 24, roughly. I've denoted the halving in each of these cycles here, and it's interesting to know that in the halving, price gets back above the 21 month. Obviously, we dipped below the COVID crash, but essentially, trying to estimate where that would be and looking at the fractal, we're looking around 30k, I reckon. Around sort of March 2024 would be about par. Obviously, it can be above that, it can be below that, but just as an average kind of guesstimate, I think that could be a decent place to look. Obviously, in the last cycle, things move very quickly off the low. It'd be kind of, instead of doing the sideways till the autumn, it would be moving up higher to then come down. Obviously, it's going to be something probably completely different, but I think they're a couple of just a decent way of looking at it for now. What do you think?
Yeah, I think the halving is definitely going to become a narrative at some point this year. That's going to drive price. And I think, yeah, like you can see in the previous cycles, the market's always kind of front run that halving to some extent. I mean, obviously it continues to go up afterwards, but there's always like a recovery before the halving, which I think is that kind of narrative, isn't it? Like, oh, the halving's only 6 months or 9 months away. And, people start getting excited, and that kind of drives the price. So I think that's something to watch out for, because I think at some point, I mean, no one's really talking about the halving at the moment, but at some point we're going to start seeing it on Twitter. Like, it's going to start becoming more of a talking point. And I think that's probably a good time to, maybe buy. Not financial advice, obviously.
I think the other big one you've got the halving, and then you've got the global liquidity cycle as well, which seems to be a 4-year cycle or a 65-month cycle. I'll just quickly get that chart up just to quickly show everybody if you've not seen it already. Because this is just, it's uncanny how this seems to work, and obviously liquidity drives all the markets, particularly crypto market. Zoom in a little bit here.
Yeah.
You know, so it's sort of interesting.
It is interesting.
Yeah, I mean, this is basically again forecasting sort of peaking out there around 2025, 2026, which is where we're kind of talking. Obviously, liquidity's down, and the black line is the liquidity index. Right down the guts, very much like the ISM or the PMI, which is a good gauge of the business cycle. Assuming at some point we'll get this tick up, which seems to be the reason I like this particularly is it does seem to be against the sentiment. I think obviously we've had a terribly bearish year, but how long will that last for? Do we get Armageddon? Do we get like a .com, or can it last for much longer, or is it just going to be business as usual while everyone's thinking it's not going to be?
Yeah.
But I think that's like an important thing just to overlay on top of it.
I mean, that's going to decide. That's going to be the ultimate driver of the next bull market. Is going to be the liquidity. And we can kind of speculate all day on whether we are in a kind of different regime now or not, and how that's going to play out. But I mean,
if someone put a gun to your head, what would you think?
It's so hard to. The thing is, because I've got basically zero experience of any of these prior cycles, so I've got nothing to compare this to at all. So to me, I mean, sentiment's obviously very negative, and there's a lot of respectable people who do seem to think that we're in a different regime now of higher inflation, higher rates, a tighter Fed, all this kind of stuff, and like the Stanley Druckenmiller thesis that we're just the stock market's going to go sideways for 10 years and that kind of thing, and that certainly fits. But then I think the more contrarian play is that, like you said, I mean, sentiment is so negative that, and that chart's pretty striking. I mean, that's been very reliable for the last several decades, so I could quite easily see it going the other way, and basically blindsiding everyone. But at the end of the day, I mean, my understanding of macro is very low level in the grander scheme. So all I can really do is say, well, 50% is going to go one way, 50% is going to go the other way, and I want to be positioned for both, really. I mean, if I was to make a call, I'd be guessing basically, and I think it feels quite 50-50. When you're literally clueless about which way something's going to go, I mean, you're going to go down the middle pretty much. I don't really. I mean, I think there's still definitely more pain ahead than some of the contrarians. Well, I mean, Raoul Powell's been talking quite bullish for quite a while, even throughout this. He always seems to be
an optimist.
Yeah, he's always an optimist. Like, maybe to fault, to be honest, but I don't think. I mean, I think a lot of what he says is like completely valid about the future of crypto and the speed of adoption, and the Fed's kind of where we are with the ISM and global liquidity, and more like the contrarian point of view. But I still think there's quite a lot of pain probably ahead still.
I guess when you say pain, I think this is where you got to be specific, because pain could be unemployment rising. It could be
pain in the markets.
And that could be the S&P coming back down to the 50-month moving average, or it could be violating it. It could be Bitcoin just staying at 15K for a year, or it could be going down to 10K. Like, do you know what I mean? Like which?
For me, it's likely that the bottom's still not in. For me, but I'm not predicting any kind of mega 2008, anything like that. I mean, yeah, it could happen, but again, I'm no macro expert. I don't know. Let's say it's a 50% chance it does. Maybe you think there's less than 50% chance, but either way, there's a there's a decent chance that it does. There's a decent chance it doesn't.
I saw George Gammon have a really interesting conversation with himself where he was saying he couldn't work out that all of the indicators suggest recession, either we're in one or we're going to have one. Yet he was at odds with himself because he couldn't understand, well, if everyone thinks that, then something's got to be wrong.
Yeah.
And it's a bit of a paradox. And this kind of led me on that quest to do the post around the 1949 recession, because I think if you study that, it kind of does solve his paradox, which is essentially the crowd are wrong, but maybe not in the way that they're thinking. So they're right in the sense that we could have a recession, or we are in a recession or about to have one, and unemployment's about to spike and all of that. But they'll be wrong about the severity of it. So I think that's the key. So it's the severity of it. So I think people assume it's going to be awful. And when I say severe, I mean breaching the 50-month moving average for the S&P, like .com and like 08 did. Where that's where they could be wrong, and that's where people were wrong in 1949. They thought it was going to be like 1929, but price held although employment spiked to 8% from 3.5%, which is exactly where we are at the minute. The S&P managed to hold the 50-month moving average. So even though it was heavily forecast, it wasn't as bad as everyone was thinking, and that's where the crowd was wrong. That to me solves George Gammon's paradox. I'm not obviously who knows what's going to happen, but I think that would be, it makes sense just from a logic point of view and a sentiment point of view.
It does make sense, yeah. It makes perfect sense.
So we do get the recession, unemployment spikes. It's just that the markets don't react as badly as everyone's thinking. But perhaps that's because liquidity is injected to cushion it, as that liquidity index is suggested, as well as also the Chinese liquidity. If you look at, I've not got a chart for it, but I've seen it posted by a few people where it's saying that the Chinese liquidity tends to lead everywhere else, and they've started increasing liquidity. Their liquidity cycle seems to have made a turn. Well, obviously the Fed hasn't yet. The question, the global liquidity index, the PMI and the ISM suggests that, we're potentially in that bottoming phase of a liquidity cycle, which possibly means the bottoming phase of the big markets anyway. But that doesn't mean to say that the bottom's in for Bitcoin. It doesn't mean, and certainly for the altcoins, even let's say the Bitcoin bottom is in now, it doesn't mean, just for argument's sake, it doesn't mean that the altcoin bottom is certainly in, and it depends which ones you're talking.
Yeah, exactly. I think that's why DCA is the way to go. And just, if you've got an income, even better, so you can kind of replenish that cash, and just always keeping dry powder, and then that way you're never going to get wrecked. Even if you're totally wrong, you're not going to get wrecked.
No, that's it.
I guess because nobody knows. I mean, nobody knows how this is going to play out in the macro. Everything's probabilities. But yeah, I mean, good points. Definitely good points.
You're right. If it's the doomsday situation, you need cash, and you need an income. So if it's the awful situation in like 08 or .com, you better have an income. You better have cash constantly replenishing, especially if you're starting to average in now. For me personally, I'm more taking a more contrarian approach, I guess. So I'm assuming this cycle will carry on as usual. Which means I've started to average in now, and I plan to average in over the next year, probably a year and a half, really, because this is something we'll get onto in detail, is that the altcoins we're going to show now are obviously the ones that we're aware of now. But we know that some of the big projects of the next cycle, whenever that comes, if we assume it's on schedule, and we top at the end of 2025, then lots of the big projects will come out post halving. So another big reason to have cash, even if you think it's going to be a good situation, yeah, there might be some trades to make with the bigger cryptos, but some of the big darlings likely will come out post-halving that are backed by all the VC money as it did last year. Think AVAX, Sol, Axie, the list goes on, all those kind of projects, they all came out around here and moved that around, it was around summer 2020, obviously just before we ramped up to the moon, and hence why they did so well.
Yeah.
Which, if we look at this kind of chart, we're looking kind of somewhere here, which is a year and a half away from where we are at the minute. I guess the thing to say there is that obviously Bitcoin is a lot higher here than it is here, and Bitcoin was a lot higher here than it was there.
Yeah.
So I don't know how you're playing it, but I think we talked about it before. But I kind of see this as like a phased approach. Like if we're entering, so you could even call it phase one of the bull market, which is basically just sideways for a year before the big phase two, which is the ramp up, sort of phase one down here after the bottom, and as the bottom in, and phase two is the ramp up. Perhaps sticking to some of the bigger coins, including BTC, maybe ETH, stuff like that. There's a good idea just to try and get 2x on your money, maybe.
Yeah, and also protecting your downside as well.
Exactly.
There's another big theme of 2023, as everyone keeps talking about, is regulation. And we don't really know at the moment what's going to happen to some of these alts. I mean, even the ones that look really good could end up getting slapped in the face by Gary Gensler. And whereas I think, Bitcoin's probably the one that you can be pretty sure. I mean, that's what's CFTC regulated, isn't it? Commodity.
It seems to be favourable with all of them, doesn't it, really?
Yeah, I think BTC's pretty much got the green light as a commodity, and maybe ETH is probably the second safest,
Yeah, well, it is, yeah, but I mean, people like Saylor would obviously argue that it's a security and all of that, but it's definitely the second.
Definitely the second. And then everything else, we just don't really know. I mean, obviously, we've got the XRP case as well. That's another going to be a huge thing as well.
I guess we'll set precedent for a lot of the others as well.
Yeah, absolutely. So yeah, I mean, there is risk to holding alts, at the moment, or like large amounts of alts.
We can show that quite neatly on a chart. I mean, just show you the difference here of the two ways. So something like, if we show you something like ETH, look how it performed in this cycle here. So it basically just copied Bitcoin. So if you call that the bottom of Bitcoin, 3,500, move up above the 21-month, back down in the COVID low, which was a higher low. So Bitcoin, that was about 5,000, and that was 3.5. This is 80, what's that, 84, and then you've got a low here of about 100.
Yeah,
it's a similar-ish ratio-ish. So you kind of, the bigger alts will follow that similar pattern on the whole. But I mean, another big alt was XRP. Let's get a better chart. Yeah, if you look at this, so that was 2019, so the bottoming for ETH and Bitcoin again got just above the 21-month, but look at the difference. It was down only all the way until March 2020, which is effectively the halvening. And that was a bigger alt at the time. So I think that's certainly something to bear in mind for some of the bigger alts at the minute. It may carry on making lower lows for the next year and a half, whilst some, BTC, maybe ETH, maybe a few others, start to make higher highs, even if they're marginal, and higher lows, even if they're marginal. There'll be big projects that don't, like XRP was one. And just while I'm on this train of thought, let me just show you Mana, because this is going to form the basis of some of my opinion of the strategy for what we're talking about with some of these alts we're going to go into. So again, this is interesting because, like a lot of the ones I'm going to show you today, and I think you are as well, Amphipod, this basically just came out right at the tail end of the bull market in end of 2017. It did down only until March 2020, but then obviously with the narrative of the metaverse and everything else, managed to perform a golden ratio plus, well, more than a golden ratio extension. So that's kind of like the best case almost for some of these alts. I mean, as a percentage.
Yeah, it's crazy gains. It's crazy gains.
Yeah, nearly well over 300-400x or something.
Yeah, that's mad.
But that's kind of, and that's the reason why, I think we've got to be looking at some of these alts, and we're basically at this stage, according to what I'm saying, which means you get your little bounce, but you may then keep making lower lows for the next year, so you do have to be careful. I mean, the one caveat I want to show you all is the downside. So the downside in 2019 was only 89%. The ultimate downside was 95. So a lot of the projects I'm going to show you today have already corrected more than that. So we can toy around thinking, well, if they go to say, we can toy around when we come to it. But that's just what I wanted to lay out at the start as like a reference point for what we're going to talk about. What do you reckon?
Yeah, I mean, 96% drawdowns, pretty big drawdowns. So like I was saying, I mean, averaging in now is good. I mean, it's definitely the time to start averaging. I mean, they could go to 99%. They could go down another.
Could go 100% to zero.
Well, they could, yeah.
Carry us this way.
Exactly, which is why you diversify. Which is why you just put in small amounts. I mean, we just don't know where the bottom's going to be, so hence why we average.
And that's it. It's basically what we're talking here is like value investing, isn't it? DCA in appropriate times, but it's basically a value investor's approach. There's zero bullish momentum at the minute.
Exactly.
But that's always the case of maximum value is the point of minimum momentum.
Yeah, exactly.
And you have to, I guess, as a value investor, you've got to be able to hold your nose, haven't you? And
yeah, exactly.
Yeah,
I mean, it's annoying sometimes when there's like something's gone down a lot, and then you buy thinking like it's a really good value zone, and then it just goes down more.
Well, this is the key case here, because here you would have been thinking, great, down 90%.
Yeah.
Say if you bought it there and you think, I'm a genius, it's popped up, amazing, and quite a bit of profit, whatever that is, that's like 2x, is it? And then, if you then got the metal to have the conviction to keep averaging in all the way down here.
Yeah.
And obviously the body blow was after you'd gone through all of that, you move up, and then we had COVID.
Yeah, exactly. Yeah, I mean, that's it. We just don't know what twists and turns lie ahead, do we? I mean, no one would have predicted that a few months before.
No, so
probably would have thought we're, maybe bottoming out, or.
But I think the way I tend to look at that is just remove the wick. If you remove the wick, that's basically what it would have been without COVID for me.
Yeah, without COVID, sure. Yeah, I think that would have been that. Yeah, that would have been the bottom. It's just, a wick on a monthly chart, though, could still be like a couple of weeks of agony.
Yeah, and it was. I remember it very, very well. It was awful. But again, if it was also the point of maximum opportunity in a way. It's a gift, and this goes back to the point of why having cash is so important. Even in a good case scenario, like I would argue, that was a normal 4-year cycle. Yes, there was a bit of a black swan of COVID, but it was very much a normal 4-year cycle. And if you get a gift like that, it's a gift. But it's only a gift if you've got cash in an income.
Yeah.
Exactly. If you've spunked all your currency and you've got nothing to buy anything up, and then it's not a gift, it's just a slap in the face.
Yeah.
So it goes back to your point, even if no one knows if we're going to have a 4-year cycle, or if we're going to have a Stan Druckenmiller pain for 10 years, whichever one it is, you need cash in both situations.
Absolutely.
So that's got to be a thing, I think, as well. But it doesn't mean that you can't, allocate now as well. I'm certainly doing both. I've got cash, I've got an income, but I'm allocated now in small, in for the smaller projects, small amounts.
Yeah, well, I'm basically just using my income to average part of that in, so I'm never really depleting my cash. My cash is still kind of steadily growing, but I'm just using my income to put.
Yes, siphon it off.
Yeah, so it's kind of a win-win in a way.
I do think you'll get handsomely rewarded if you can do that for the next year and a half.
Mm.
Because then if we are in a normal 4-year cycle, you will be incredibly handsomely rewarded. If we're in a Stan Druckenmiller, I still think we'll see moments of, there'll certainly be bounces, a bit like post.com.
Mm.
It lasted for 2 or 3 years after the .com, but then we got a rally up to the all-time highs, didn't we?
I mean, I'd take that, I'd take the rally back for a lot of these coins to the all-time high.
And this is my point. Imagine how some of the alts would perform if Bitcoin just went back to all-time high and no further.
Yeah.
There would be 100x opportunities on the table, even in that situation.
That's it. And even if you don't make 100x, even if you make 10x, like that's still a lot of money.
No.
Considering how much money you're going to earn in a year and how much you're going to put in. If you aim for the stars and you don't quite get it, then you're still going to do really well.
Aim for the stars, land on the moon instead.
Yeah, exactly. That's it. So I think that's another thing. Like in 2021, I was so kind of greedy. Like I seem to think that I had to think that I had the right to kind of come into crypto in 2021 and become a multimillionaire in like a few months is just laughable now. It's like, and any kind of like OG investor will they just know that these get rich quick opportunities are rarely like, and yeah, sure, the opportunity was there. Like it would have been possible to do that, but the downside risk, as we've seen, was enormous as well. And you had to pick the right projects and you had to know what you were doing. And so I've kind of learned as well not to be like too greedy. Like, you can have like some number in your head of how much you want to make in however much time, but at the end of the day, all you can do is just do the best with what the market gives you. And if I don't make, as much money as I'd like to make in a given amount of time, then just be happy with what you have made.
Yeah, exactly.
If I only make 6 figures instead of 7, like that's still a lot of money compared to what I have now. So it's like, it's not black and white in that sense. We'd all like to make 20 million or whatever, but it might not happen next cycle. We don't know.
Yeah, and like you say,
10 years to get that. That's to have 20 million and by the age of 40 or something, still incredibly well played.
Well, I think I'd say the age of 40, the average person's net worth is probably 100 grand maybe, or you can see it, maybe not even that. I would think like I've seen like loads of data and stuff like that. These kind of numbers are crazy for the average person. They just become normalized in the space because people achieve them.
Yeah.
And maybe not everyone achieves them, but certain people do, and you hear about it online, and that gives you that expectation that.
Absolutely.
And then, but again, it depends how much you're starting with. I mean, let's say you've got a portfolio of 100 grand now, which is still obviously a fat chunk. To get to 20 million, you've got to do what, 200x. Like, I mean, come on. I mean, it's huge. Like you say, but again, this is the whole point of altcoins is you get these opportunities maybe, well, to hit those kind of numbers if you can buy them at the right time and sell if you know when to hold them, know when to fold them.
Yeah, but you've also got, not only have you got to get in at the bottom, sell at the top on the right altcoin, you've also got to commit pretty much, if you got 100 grand now, like 100% of your cash to it as well.
Yeah.
If that altcoin makes a 200x, so the risk you're taking there is absolutely enormous to do that. So, I mean, no one in the right mind is actually going to do that.
It's a good job I found some that are going to do 1,000x, so we're all good.
That's why we're here. Yeah. Well, that's it. I mean, I'd say, managing expectations, like, just trying to play what's in front of you and do the best with what's given. rather than having some arbitrary number in your head that is, it's like that or nothing kind of thing.
I think, yeah, I think that's a really good point. I kind of see the actual, if you strip it all the way back to just Bitcoin, that's kind of how I see that as well. And it's kind of, this is what confused me in the last cycle, because everyone was thinking we're going way over 100K. And it never came. And the problem there was thinking more from a price perspective rather than a time perspective. When in reality, the timing were the end of the year, the end of the normal cycle. You got to be half thinking we'd already had a massive run by then.
Yeah.
You got to be getting very twitchy. You got to be the opposite of the normal emotional cycles. You got to be euphoric at the bottom, and you got to be scared as fuck at the top.
It's pretty funny when you think about it, and to kind of justify being bullish at the top, there was all this like lengthening cycle theory.
I know.
And when you think about it, it's just a way to justify your addiction, basically.
At the same time, though, you could use that, even though I know there is there's always a logical case for anything. There's a logical case for that. You could use the same for the bears now.
Yeah.
So you could say they want a lengthen bear cycle for the same reason. And this is
a little bit more meat behind that argument than, say, the lengthening cycle theory in the 2021.
I don't even know what that was mainly about. I mean, essentially, again, doesn't matter. It basically just comes down to liquidity, really.
Exactly.
If there's liquidity there, the markets are going to go up. And it got sucked out at that time, which happened to be the end of the Bitcoin cycle, at the end of the liquidity cycle, as expected in hindsight. But again, now, although there's all the macro mumbo jumbo, everything's going on, essentially the ISM's right in the guts. Liquidity cycle started in China. I'm betting it's going to start in 2023 personally. But that doesn't mean I'm going to go all in. It just means that's the way I'm leaning.
It could well be, which is why you definitely want to have skin in the game, and you want to be starting to DCA now, because you don't want to be left with empty bags if it does take off earlier than people think.
Yeah, I mean, I still expect things to go crazy at the end of 2024. I'm expecting maybe at most BTC could do like a 3x something, but I'd say really if it got to about 30 odd K in 2023, I'd say that would be an amazing, like that would be really, really bullish.
Oh, yeah, definitely.
But I'm not expecting crazy fireworks, particularly for the alts either. Like I think that they will come at the end of 2024. There'll be the odd project, obviously, like Quant and Link, with the exceptions in the last cycle that just kept going up and up, even, during 2019. So there will be exceptions, but I think for most projects, it will be end of 2024 and in 2025 where you see the real fireworks.
Yeah.
The huge gains. But again, the good thing about that is it just gives you lots of time now to do more research, gather more. We're going to discuss a bit of a shopping list today. XL's actually gone down for some reason, so neither of us can get all of the full list, but we've still got a load to talk about, so we're going to go over that. We'll probably release the list on Twitter when XL comes back online, so we can do that. But we may as well get into it. Should we?
Yeah, let's go for it.
Do you want to start first?
Yeah, you can start, mate, if you want.
Okay.
What's in your bag?
What's in my bag? Right, as we talked about, I'm going to start with this one first.
Flow.
So this is Flow. Let's get this on CoinMarketCap. I've lost all of my Excel, so we'll go from here. So to start, it's quite a high rank coin. It's 50 rank coin, which I'd never heard of it until I'd done this research over the last few months, which is surprising considering it's so high up. It's got a fully diluted market cap of about $1 billion. So talking tokenomics, I mean, yeah, it's not too bad. There's still some tokens to be unlocked. The main thing that this is to do with is, as you can see here, NFTs. In particular, it's the partnerships they've got. So the big one for Flow, they've got partners of Meta, Google, and Ticketmaster.
Mm.
And I found this because what I was trying to work out was which is a likely project that's going to build NFTs into tickets, gig tickets or sports tickets, anything like that, because it just seems like such an obvious use case and a massive scale.
Mm.
The fact that these are partnered with Google, Meta, and Ticketmaster, and that's exactly what they're trying to do for Ticketmaster.
Yeah.
You can dig into more the fundamentals, the team, and everything else. But I mean, just that alone got me excited. So that got my attention. But when you click onto the chart, I mean, it's absolutely,
Massive.
orgasmic, really. And again, yeah, massacre, which to me I would say is euphoric now, and that's how you should be wiring your emotions. So I mean, we can see from the top. I mean, bear in mind it topped in the first peak in mid 2021. I think I'm gonna have to put this in a log chart. Yeah, I've just about got that right. So minus 98%, 0.5%, -9. So don't forget when mana was down at this stage of the cycle in 2019, it was down minus 89%. That's the difference. That was mana at the end of 2019. So and it only went 95%, which is probably around here. This is minus 98.5. And I guess the other thing I like about this is a bit of crude Elliott waves.
Mm-hmm.
Seems to be 5 complete waves. And on top of that, if you do a fib of this wave, thinking that the 5th wave is usually a golden ratio extension, absolutely bang on the money. And so that's why I bought it, because it satisfies quite a lot of my criteria. It's basically got all the fundamentals you'd ever want for a smaller token. It's not even that small. Elliott wave, and obviously thinking where we are on the liquidity cycle. I mean, even just looking at the volume profile, it's just tapered off. You take it on a linear chart, it's clearly wrecked, as we know, but starting to soften. It's starting to round, which is obviously what we want to see. Then if we look at the numbers, so just back to all-time high from here is 66x. Again, if we use the mana analogy and do a 1.618 extension, you get up there. Yeah, it's almost 1,000x. Obviously, with the market cap, that would be ridiculous. It would be nearly
Trillion.
Yeah, basically. So I'm not,
that's where the fundamentals come in, isn't it? That is it if it reaches some kind of adoption like it could do, given its value proposition and its partnerships, then sure, why not?
But again, it depends. We'll have a look at its token unlock schedule, because the tokenomics is obviously really important. But its current unlock, it'd be a 36 billion project at the all-time high, which, thinking of the next cycle, I've done this here. So this is 25, and that's in 2026 or at the end of 2025. So I try to do this in all the charts so we can kind of visualize if it does follow a normal cycle. Yeah, we may go lower. There might be a bounce and bullshit here, but we're looking to be obviously maybe not get all the way up here, even if it just gets back to this, all-time high. You know what I mean? That you can kind of visualize how it would look. This is obviously just all the bottoming phase I would expect, even if it bounces around some bigger moves or goes underneath, whatever, for the next sort of year until the halvening, essentially. So yeah, just let me quickly just tokenomics for this. Here we go. So I've got a good chart here. Is there anything to be careful of with big unlocks? There we go. So yeah, so it's got a current inflation rate of 21%. So that's like the negative. I mean, it's not horrendous. There's some that have got far worse tokenomics than that. So there is still quite a few tokens to be unlocked. So we'll see how that goes. But an interesting project, nevertheless, an interesting chart.
Yeah, very. Definitely need to look more into that one. I mean, it did really well. I think it did really well in the back end of the last cycle because it was one that I knew about, I'd heard about, but didn't know anything about it.
According to this, it was just down only from the March peak.
Yeah, you're right.
I mean, maybe this is coin market cap data. I don't know if there's any other data.
I thought it melted faces because it was one that just kind of popped onto my radar, which is normally like the ones that were like mooning. But maybe, I mean, so it bottomed out in June about 6.5, then went up to yeah. So it didn't really. Yeah, I don't know why. Don't know why I heard about it then, but anyway, I mean, yeah, that sounds interesting.
Yeah, and something to do. So I mean, that's one narrative we've got is sort of in the NFT use case sphere, if you like. So I guess NFTs were a big narrative of the last cycle, but I guess the new cycle could be the actual utility of some of these NFTs. Not just, I mean, art is one utility, but I'm thinking more practical utilities of them.
Absolutely, yeah.
You know, so ticketing would be one. Do you want to show one, or do you want me to carry on with some of these others?
You can carry on. I mean, I haven't got any charts prepared. I've just mainly just been looking into like fundamental research at the moment.
Well, I'll tell you what. If I'll maybe keep going with what I'm doing. Then if I come across a narrative, like if you got, you know, within that category, so NFTs, you can speak about anything in that category. Have you got anything?
NFTs. I mean, I've got some on my list that I haven't really looked into yet.
Well,
that are kind of, I guess, linked. So there's one called, well, it depends. Are we including like metaverse as well, or are we just talking strictly NFTs?
Yeah, probably just NFTs.
The only name that I've got is this one called like Vivi, which is digital collectibles. I don't really know. I haven't. It's on my short list. I haven't actually got around to looking into it yet.
Okay.
It's just like a name that I've heard being dropped.
I think you're going to come good here with the PERP Dexes, aren't you?
That's what I've been looking at the most. I haven't really.
That's
I've got
going
like
to be
20
great.
or 30 different coins that I've probably only looked at about 10 at most.
That's great though. That's still like that'll be. I think because PERP Dexes is a big one.
That's the one I'm focusing on at the moment.
What we'll do? Let's go on. I'm just going to wrap up on NFTs from what I've got, and there's one more to show you, and then we'll go on to PERP Dex if you want.
Sounds good.
Okay, so still on the NFT realm here. Right, okay. So I got this. So this is called Lux Rare. So let's just quickly just see where we're at with it.
Definitely heard people talking about Lux.
Okay, so rank number 245. Basically, what it is it's like a decentralized marketplace for collectibles and NFTs. There's really attractive staking on their platform as well. Still quite a small project. Inflation rate again here, so fully diluted market cap of 152. So double what we are now. So I think this is the big concern with it. So if we get that out the way first, looks. There we go. So it's got so January the 9th, there's a big token cliff about to be unlocked here. So careful until this date, and obviously there's going to be more tokens. You can have a look at the full unlock schedule online. So this is one to keep an eye on. But the use case seemed interesting. I came across this one from Arthur Hayes, who obviously was the BitMEX guy. Saw a podcasted with Felix Youth, I think it is, who's a macro guy. And he basically, right at the end of the podcast, he said, "Oh, you know, any sort of small tokens or any tokens you keep an eye on. And he mentioned this for those reasons that I've just said. Again, from a chart perspective, let's get it up, sorry, is really attractive again. So let's so I mean, again, if you look at it from the terms of a linear scale, so end of 2025 is here. So again, absolutely crushed. The crushing seems to be bottoming somewhat, certainly starting to round on the linear chart. I mean, you can see the volume profile. Interesting that there's a massive bullish divergence with the weekly RSI. We'll go back onto a log chart. You can see it a bit clearer. You know, again, I'm anticipating probably a bit more pain for this one, but again, if we just look at the rough numbers where we are with it. So it's still minus 98%. All the way down here, we're looking at minus 99 point something, you know, so it's still minus 98% down here. Back to all-time high. 60x. And again, it's another one. If it does the golden ratio extension, we're looking at about 1000x. Obviously a much smaller project, this one, but again, with the chart and the use cases for it being mentioned by Arthur Hayes, I thought was interesting. There's really generous staking, not stupid, but just, you know, solid staking options on it. It seems to be a competitor to OpenSea. So OpenSea's the, you know, the main marketplace, but you'd think there will be other marketplaces that will come online. There seem to be a few different incentives with this, with the token it's got, and with the way it kind of works. It seemed quite interesting. Certainly something to look at in more detail from a fundamental perspective. But I've kind of just gone more broad and looked at the charts and broadly the fundamentals. So I've not done loads and loads of research, but there's enough interest to me here to suggest that something definitely to keep an eye on here. I mean, that chart alone is attractive to me.
Yeah.
Given its utility as well and the staking, I think it's a really solid one. Again, very similar to Flow, amazing upside. You know, it's a much smaller token, ranked 200 and something, but something really interesting in that sphere of NFTs. So yeah, that's another one, a little tip off.
Nice. Looks good.
Looks good. No pun intended. So yeah, I guess the only negative is the token unlock. So just be careful with that. I'd look at the supply schedule of how the tokens are going to come. But I remember looking and thinking, well, it seemed to time nicely with around 2024. So it's obviously like a curve, isn't it? Like that, the token unlock schedule.
Yeah.
I think around 2024, the majority of the unlocks are going to be done. So hence why I just drew this really crude chart of, you know, how it might just be dead all that time, probably even going lower until then. You know, then it might start to pick up when the next cycle comes, you know, post halvening. But again, it's minus 98%. I mean, come on. Like, that's good enough for me. I've started accumulating, even though I know there's a, you know, I'll accumulate more as the unlock schedule carries on.
Yeah. That's it, yeah. And we don't really know how that'll actually affect price. I mean, it could be priced in to a large degree.
Yeah, it could be, or like you said, if there's demand that counteracts it. So if Bitcoin price moves up during one of those unlock schedules, that could soften it.
Yeah, exactly.
Stuff like that. So yeah, it's a good point.
Well, actually, it's something that I hadn't realised that I found out was, did you know for, you know, ALGO,
Yeah.
like a massive inflation event in 2021 in ALGO?
Well, look,
where they just dumped like a hell of a load of ALGO tokens in 2021.
I think this is really important because I think when you're a beginner, you look at the charts and you're just starting to look at the charts, you look at the fundamentals, but you forget the tokenomics.
Yeah, exactly.
And it's so important because a lot of these, I mean, I've got ALGO here. It's still got an inflation rate of 23%.
Yeah.
Obviously, it's got a big market cap. I mean, XRP is another one, the 23%. You know, you can see some of the others on this hit list I've got here. Some quite big projects there that, you know, that seem to get mentioned a lot. AVEX, ALGO, XRP, Sand, HBAR, AXA, Uni, CRV. I'm not sure. Is that Curve or?
That's Curve, yeah.
Yeah, 1 inch. MC. I mean, that's the one that Pentoshi shills, isn't it?
Merit Circle.
Yeah, I think he works with them, or he's got a partnership with them or something. Anyway, it's something to keep an eye on this list, but then obviously there's lots more. But really important point, that isn't it? Tokenomics.
Yeah, I think I mean, isn't ETH deflationary now?
I've heard something like that. Yeah.
Yeah, I think the new tokenomics, it's actually like, because it's got this like ultrasound money narrative to it, hasn't it? Where, you know, people are claiming it's better, even more sound money than Bitcoin, and because it's actually deflationary. Which, yeah, I mean, I don't know. Not quite sure about that, but I think the tokenomics of ETH are looking pretty good these days post merge.
Yeah.
I think even ETH would be a good buy.
Let's have a look at ETH. The only thing that worries me about ETH is the might be slightly illogical, but let's have a look. It's just looking at the chart. Let's have a look. It's a good one to talk about. Let's get off this Haikinashi. Yeah, so I mean, you hear people calling for 700, you know, down to here, which, you know, I guess is the equivalent of BTC at 10 or 12, maybe. It does look here like a wave 1, 2, 3, 4, and we're kind of wave 5's in progress. You know, is this kind of some kind of double bottom? Because I mean, looking at where we are in the cycle, you know, here at the end, so I mean, equivalent is here. You know, so I mean, are we bottoming around this kind of price level? It's hard to say.
ETH could go a lot lower, for sure. For sure, it could go a lot lower.
So if we went down to 700, I mean, that it is quite a drop, isn't it, from here? But it's a tough one. You're right, though. Like, it's a solid project, and I think
for the next cycle, it's a good one. There's so much building going on ETH. I mean, you know, all these like new flashy layer 2s that are coming out on ETH. You know, like Arbitrum, and there's this new one called Starknet as well. I don't know if you know about that.
No, I've heard a lot about Arbitrum. It's not come out yet, has it?
What, Arbitrum?
Yeah.
Yeah, it has. Yeah. I think GMX is built on Arbitrum.
That's it. I know there's loads of things built on it, but I can't see where the hell to buy this thing.
Oh, the actual token for I don't know, because I haven't really done a deep dive on layer 2s properly yet. But I mean, there's a new one that's going to come out this year called Starknet, and the token hasn't even been released yet. I mean, that's how early that is, and there's quite a lot of like hype around that. Yeah.
Just while we're on ETH, mate, I think I mean, there's certainly it's everything's built on it. It's a solid, hell of a solid project. I mean, look at this. I've just quickly done this. Look at the RSI, monthly RSI on that line.
Yeah.
I mean, that seems. I think maybe some of my thoughts on that may be a bit illogical. I'm not sure. I just don't seem to have a bit of a bad feel about it. But again, here, lovely. Matt D's following the rounding. You know, showing the bearish momentum's weakening effectively.
Yeah. I think ETH will be a good buy for the next cycle, definitely.
I mean, it's made a higher low here. This is the interesting. Obviously, Bitcoin hasn't, has it? So from its June low, it's made a higher low currently.
Yeah.
I mean, BTC's just made lower lows, hasn't it?
Yeah.
Quite interesting. I mean, the other chart for this is the BTC chart. You know, is this distribution? Is this like a double top? Or is it higher highs or higher highs but higher lows?
Well, it's got a nice little trend line support.
Something like that.
I mean, you could extend it all the way back to 2017, I think, and just, it won't be exact, but Yeah, that one, or I was thinking possibly the one above that as well.
Yeah.
Yeah, like draw one from there maybe, and just like pull it down a bit.
Well, see, if
Yeah,
I was going to do that, I would draw it like that. And
yeah, exactly.
this is what I'm concerned about. To me, I think Benjamin Cohen said this. It does look like distribution at the top
Mm.
because it could still come down here, and that would be a macro higher low to this.
Yeah.
But in that move there, that's like losing half its value nearly against BTC.
Yeah.
It's just something. Yeah, something. But then if we go back to the just to the Ethereum USD, it does look just on the monthly looks quite attractive with some of the indicators. Here is clearly, it's a solid accumulation zone anywhere down here on the RSI.
Mm.
These weak, the bearish momentum's weakening solid.
Yeah. 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 I think there's a lot of innovation going on Ethereum.
Yeah.
With layer twos and then things built on top of those layer twos, like these new PERP Dexes and I just think.
Well, do you want to kick off on some of your PERP Dexes?
Yeah, I mean, sure.
Do you want me to switch the screen share around?
Yeah, you can do. I don't have any charts particularly.
Have you got anything to show, or are you just going to be speaking? Because if you're speaking, we'll just keep the charts up in that
Yeah,
case.
keep it up. I mean, the
Well,
ones.
I
I
can
mean,
get
the
the
ones
charts
that are
up.
on my list are probably ones that you've heard of. I mean, there's obviously DYDX.
Yeah.
The main one. And I mean, basically, what I've been looking into mostly is the different type of PERP Dexes.
Okay. Well,
So I
that's
think
great.
there's definitely going to be like a big demand for PERP Dexes because people want to something like, I can't remember the exact numbers, but there's a lot more leverage trading goes on than spot trading. I can't remember the percentage, but a high percentage of the total trading volume on centralized exchanges is with leverage. There's definitely going to be a call for that, especially with all the FUD around centralized exchanges at the moment. It seems like an obvious narrative. Not just a narrative. I think there's actually going to be a genuine need for them, and I think that is just we can probably all agree that is the way it's going. I mean, towards it's kind of the whole point, isn't it? Decentralization, decentralized finance. But yeah, there are different types. So there's basically, you've got ones like DYDX, which is the order book model. So basically, it uses the same model as a centralized exchange, where it's basically player versus player. So you're going on that exchange, and you're just basically you've got a load of people trying to sell and a load of people trying to buy it, at various prices, and all the participants effectively just agree on a fair price at that time.
Yeah,
that's kind of the order book model.
I'm going to write some of these down while you're talking. Sorry, carry on, mate.
Yeah, which in a sense kind of like I've heard. Do you know this guy called Geordie?
Yeah, I think so.
Yeah, he's pretty big brain in the space, and he runs like a crypto hedge fund, and he's obviously like knows his onions, let's say. And I mean, he was saying like he thinks that the future of DEXs and PERP DEXs will be the order book model, because that's kind of like you literally just you're just going like player to player, basically peer to peer. So you're not trading against the protocol as such. You're trading against other people. So literally just like an open marketplace. But with say DYDX, you've also got the advantage that you can use leverage. And I think the idea is that like reduces on fees as well, because you're not playing against the platform. Like the platform doesn't have to
Let me just see if I've got a chart of that, because I mean it's a lovely chart. I mean the only thing with DYDX is there's this huge token unlock coming, isn't there?
Yeah, exactly. The tokenomics are pretty awful
For the minute, yeah. But I mean again,
something like 10% of the total max supplies in circulation, and it's going to take quite some years before that's like
I mean, even saying that though, it's still 96% down. I mean, I've kind of looked at this as kind of like a 1, 2, 3, 4 with the fifth wave to come. So that I'll put this as a golden ratio extension, which would give us, if we get just quickly back to the charts and what you're saying, and we'll carry on with what you're saying. That gives us 98% down here, which is 50. So that's, we're currently at 118. That's 50 right there. But again, considering all these tokenomics, I mean, the RSI is, well, it's got, I don't know if you call it bullish divergence, but it is sort of a divergence. It's more up than certainly the prices. Same again on the stock RSI. Seems to be, what I'm expecting is maybe a little pump, a lower high here, for us then to start moving lower.
Yeah.
But I definitely think it'd be one to accumulate over the next year. Here's the halvening. Let's just quickly look at the tokenomics, just quickly, talking about it, because
that's what I was gonna look up. Yeah.
Supply schedule. Let's see if we've got that nice chart. Supply schedule. There we go. Need the curve. That's it. This is the bugger we need. Right, so it really doesn't start slowing down until 2026. We can look exactly what these. Let's get this thing up the way. Exactly what these things are.
Yeah, I mean, look at that big bad boy coming up.
And this is the cliff that we're talking about in January 2023, or 5th of Feb, is it? Whenever it is, end of January 2023.
Yeah.
Which is why I think we get a lower high on the chart before a wreckage. I mean, really, from here, from Jan 2024, it does then start to soften, doesn't it? I mean, really, from the end of 2023.
Yeah.
So the end of this year, it starts to soften, then it's a lot more gradual. I mean, by the end of 2023, see, we're here. So we're at about 700 million. So we're basically 70% of the way there. Which I think then, given the halving, I think that'll be then acceptable. So I think the way I've kind of approached this one, I really like the fundamentals. I've looked into it a little bit. I like the chart. Yeah, I like the chart as it is. Obviously, the things you're talking about as well confirms that more. But when you look at the tokenomics, we're looking at, if we can get into there, that'd be lovely. And it makes sense. Maybe we go low. That's minus 98% there. And it makes sense with the tokenomics. So maybe we get a little lower high here to then start the cliff edge. We then start migrating into this level. And obviously the supply, is bad all the way until the end of 2023. And then it starts to just be on a gentler curve. But at least by then we're 70% of the way there.
Yeah.
So, if you can buy it down here over this whole next year, I mean, that's the zone there, sort of pre-halving. You've still then got an upside if you can get it minus 98% at 45, currently at 118. You're 60x back to the all-time high.
Yeah.
I mean, what's the market cap on this? Right, so it's, fully diluted, I guess. Yeah, this is the issue again. As we know, terrible tokenomics at the minute, which will get better over time.
Yeah, I mean, it's got the kind of the network adoption. Like, I think it's the third highest revenue DApp on Ethereum or something. But they're moving to their own chain.
Okay.
So they want to basically move to completely their own chain based on like Cosmos.
Yeah.
They're basically going to use the Cosmos blockchain to like build their own. And the kind of branding themselves as moving towards like full decentralization. So they'll have like a DAO and all that kind of stuff. Yeah.
I still think it will do well. I mean, in the next cycle,
Yeah.
I just think for the next year it's going to be under pressure. It will be under pressure all this time. I mean, Jan 2026 here, it's going to have nearly the whole supply unlocked.
Yeah, yeah.
And by that's when I reckon the bull run will have finished, the next bull run, if we assume it's going to be the normal cycle. So,
well, as we've seen, tokens can still do really well. I mean, like Algo. Let me show you this. We'll come back to PERP Dexes after.
would you want me to get an algo for you?
Let me just show you this this article I've got, or actually, yeah, I'll just share it quickly.
There you go.
It's quite interesting. So, yeah. So the great mass inflation event of 2021, the circulating supply increased by 533% in 2021. That's like a 6x in circulating supply. And you can see this chart here, what happened to the circulating supply.
Yeah. What date was that? September 21.
Yeah, exactly. Yeah, so basically, yeah, they ended up accelerating the vesting schedule. So they just like just paid off a load of their investors like ahead of schedule, basically. But you know, even in those conditions, it's still. I mean, it might explain why it didn't moon as much as some of the other ones did. But you know, it's still, even in those conditions, it's still doing well.
Let's go back. Can you go on the charts, or I can do it on mine if you share mine?
What, for Algorand?
Yeah, I just want to see. Well, let's see September 2021. Obviously, that's when the market was starting to recover from the summer lows.
It was slow to get started, I remember, from the summer. Yeah, this is the summer lows.
Well, I mean, look at that.
Yeah,
okay,
exactly.
so then it started to cool off there. So they basically timed that. I mean, that did then. So you got the run up from the summer recovery, then it did stunt the growth.
But I think this, yeah, it did from here till.
And that's what I mean, because you know, some projects
Could have carried on. Couldn't it? Yeah.
Most projects were going making a higher high there, whereas that made actually a lower low, a lower high, sorry, in November, which is probably due to that.
Yeah.
And don't forget that's right in the middle of the peak part of the bull run as well.
Yeah, exactly. And that was a massive drop of tokens.
6x.
Yeah, like if you look now, so we've got 7 billion now in circulation with max supply of 10 billion. I mean, that looks really healthy.
Yeah.
Considering I mean, you know, the fundamentals of Algo.
Well, what you're saying is the worst of it's out of the way.
Yeah, which makes me bullish on it long term now, even more bullish. Because I didn't realise that all that.
No.
And that just adds to the bull case for Algo.
It does for the next cycle, and this hammers home the point of why tokenomics, especially for all these alts, are so important to keep an eye on.
I mean, yeah, it's only got a fully diluted market cap now of like less than 2 billion. That's fully diluted. Let's just say take its market cap, which is just over 1 billion. You know, there's nothing stopping that doing 100x from here, really. You know, if the conditions are right, if it has the narrative, obviously, I mean, I see this as more of just a long-term VC play. Like,
well, the total
idea when it
cap
will gain the narrative, but
you'd think what the total market cap on the next cycle is going to be, what, 10 trillion?
Yeah, quite possibly.
Because what did it reach this time? Was it 2 trillion, I think?
Was it 2 or 3? Yeah, around that.
Yeah, so you'd think maybe around 10 trillion is probably about right-ish.
Possibly.
Maybe 7 trillion or something like that. So 100x from where you are there, you're looking at 200 billion, aren't you? Which is doable if you've got a 7 trillion total market cap.
Yeah, exactly. Yeah. So
Anyway,
yeah, the tokenomics of kind of lining up really nice for ALGO now.
yeah.
And then obviously you got the partnerships, and the one narrative that it really has got is like the kind of green ESG narrative. Like it's seen as being like one of the really green ones.
Yeah, the WEF probably love it.
Sorry?
WEF probably love it.
Yeah, exactly. And a lot of like it's getting the partnerships, and it's got a booming DeFi ecosystem as well, and NFTs and all that. So yeah, I definitely think as L1s go, I would definitely this is one that I'm pretty bullish on long term.
Yeah.
I haven't really done a deep dive on Algo like recently, but that's just one that I'll just continue just to add to, I think.
I'm just going to quickly get the chart up on my own. Oh, yeah, I mean, the chart now, the monthly or the weekly is lovely. It's absolutely lovely at the minute. Lovely chart. It's very similar to a lot of these, a bit like AVAX. They just come right down to almost as low as they've ever been.
Yeah, exactly.
Stock RSI's crossed recently on the weekly. Weekly RSI has got bullish divergence. The price is almost as low as it's ever been. So 18 cents now, you've got, back to the all-time high. What's that, about 15x from here? Let's have a look. 13x from here. Let me just do a golden ratio extension just from where we are, thinking ahead to the end of the next cycle. Golden ratio extension I've got is $13.
I think that's very doable. Which not far from 100x. What's that? Probably at 70x or something.
84x.
Yeah, exactly.
I mean, this is why we're doing this bloody video now, because I mean, it's bargain basement for some of these alts.
It is, yeah. I still think caution in the short term. Like I wouldn't be piling in.
No.
No matter how good the chart looks, it can still get a lot worse. But I think it's definitely. You're right. It's definitely the time to be averaging.
But this is the funny thing. Most people go all in when it's at the top.
Yeah.
If you're going to go all in now. Don't do it. Don't do it when. You know what I mean? It's like if
you're going to go all in, definitely do it. Better to do it now than.
And obviously, you should never go all in anything, at any time. But the point being is that of course, you can go down from here, but I mean, the downside from here is much more limited than it was when it was back at over $2.
Yeah, for sure.
Yeah, it's
and it's one of those projects I can't see it going away.
Like no, you're right. The fundamentals plus the the rapidly improving tokenomics are what makes this really attractive, and the charts are lovely.
Yeah,
makes it an attractive.
Also, the team as well. I mean, obviously, like the founder Silvio McCarley as well.
That's what I mean. All the fundamentals are really solid. It's
very, 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 very solid projects. And I've heard a lot of people, like a lot of smart money kind of guys, have it on their list. Like even Raul Pals mentioned it. It always seems to just come up amongst like the more like institutional guys when they mention, like when you just keep hearing the same name quite a bit.
Yeah,
it kind of rings those bells. Like I've heard Algorand come up quite a few times, which obviously just adds more confidence.
Let's
I see it as like one of the blue chip alts, basically.
Well, it says it's ranked 32, solid. Interesting to see how it performs over the next, if we'll make lower lows between now and the halving, or if it'll start to recover and hold these lows.
Yeah, exactly.
Should we go? Let's go back to the your PERP Dexes.
Yeah. So as I was saying, we've got like the order book model for PERP Dexes. Then there's also like, so that's like DYDX. There's also like the AMM model, the automated market maker. So that's what basically all all dexes use, like Uniswap. And basically, instead of trading like, against someone else, like if you want to sell your wrapped Bitcoin or whatever on Uniswap, you have to literally sell it to someone. Like you're literally just exchanging it to someone. Whereas these AMMs have like a pool. So they'll have like for a pair of tokens, you'll have like, let's say ETH USDT, and people have to deposit ETH and USDT in certain proportions. And they don't have to, but they get incentivized for doing that. So you can like provide some liquidity to the platform with, say in given pairs like ETH and USDT, and you'll get a slice of the trading fees for doing that. Mm-hmm. And the idea of that is that you're then trading against the pool. So the price of ETH will basically just be a function of the amount of ETH in the pool relative to the amount of USDT in the pool. Mm-hmm. So if let's say someone buys a load of ETH, so they basically take a load of ETH out of the pool and deposit a load of USDT into the pool, then all of a sudden the balance is shifted. So there's far less ETH than there was, more USDT, which means that the price kind of automatically
goes up.
Shifts. Yeah, so ETH is now worth more USDT. Mm-hmm. And then basically to keep that in line with just the general market value of ETH, you've got all these like arbitrage bots that will then go on. So if ETH is like higher on this platform than it is on Binance, they'll be buying it up on Binance and then dumping it on this platform, and that'll bring the price back down, kind of in
equilibrium almost.
In line. Yeah. So this is the arbitrage bots that kind of keep the price in equilibrium with the kind of wider market.
Probably price. Make a tidy profit while they're at it.
Well, exactly. That's it. So everyone's incentivized, which is exactly what you want in an ecosystem. You want everyone to be incentivized.
Exactly. Yeah.
So that's the AMM model, which is what most of them use. But then there's also like this more synthetic model. So like you probably heard of Gains Network as well, GNS.
GNS, yeah, I have, yeah.
And that's really interesting because that's like the other model is where you basically just use price feeds. So Chainlink's quite a big one, like the Chainlink price feed oracle. So Chainlink's basically an oracle. So it just it has like live feeds of real world data. So prices of various assets. And a lot of them use these oracles. So rather than having their own pools or their own order book, they'll just basically get the live price that will maybe be an average of like all the top exchanges fed into their platform.
And that's GNS.
GNS is like that. So it's synthetic. So it's not really like the price isn't really being decided on the platform. Like it's not really.
It's being decided by external fed data.
And then fed in. So when you're on GNS, you're not actually interacting with the assets that you're trading.
And synthetic.
Yeah, so you don't actually have to own AVAX to go on there and trade AVAX. All you need to do is to have DAI. They use the DAI stablecoin, and basically you can go on there and trade AVAX, and then just you deposit your DAI, and then if you win, you get more DAI back than you put in. If you lose, then you get less back than you put in.
Yep.
And so it's basically like going to a casino and being given chips. You play your games, you cash in your chips at the end, and you're not really interacting with the actual assets that you're trading. So it's like hence synthetic, which is quite interesting. And you can use like insane leverage on GNS as well.
And just to mention, GNS was on my list, not just for the specific reason that the chart is so unusual. I don't know. So if you look at the chart, it's basically, it came out at the end of 2021 and the price is very near to the all-time high. So it went from nearly $5 at the top at the end of the last bull cycle in the end of 2021, got down to the bottom around 50 cents. Now the price is at $3.37. Really, I mean, it's not something I would want to buy at the minute.
No.
It's interesting how it's performed so strongly in a bear market.
Yeah, and I think that's the whole narrative. Like, well, I don't know. Actually, this was June, wasn't it? So this was before FTX. I think it's probably just adoption. Like, I think it's quite an interesting model.
Where go on coin market cap on your thing? Where is the
Tokenomics are good as well.
let's have a
Tokenomics
look.
are really good.
Let's see where we are with it.
I mean, well, it's all out according to this. All the supply is out.
And it's ranked bloody hell 2,668. Oh,
It's
yes.
actually deflationary. So they have this mechanism on GNS where basically they've got like a pool of GNS token and DAI. And they're basically, if people are winning, so you think of it more as a casino.
This is it. It's built on Polygon though, isn't it? On Matic.
Yes.
That's it. That's how I know about it. It's a PERP Dex built on Matic. I've got this on my list.
Yeah.
Interested.
But yeah, I mean, think of it like a casino. So people go on, they deposit DAI, they trade with leverage up to like 1,000x and crazy stuff like this, or 150x for crypto or something. So there isn't like that restriction there.
Yeah.
And then when they win, they cash out, and so think of it like a casino. But they have this they have this pool of DAI that they'll use. People deposit their DAI into that pool, and then they'll use that pool to pay people out if they win. And they also have a pool of the GNS token, and they have this mechanism whereby if people are winning a lot, so the DAI pool is depleted, they mint more GNS token and then sell it into DAI to replenish the DAI pool. And if people are losing a lot, so the DAI pool is actually built up more than above the original balance, then they will use that surplus of DAI to buy GNS token and then burn it. And then so basically they work on the principle that in general people lose more than they win, just like any good casino. And same with trading, like on average people lose. So they've got a mechanism whereby they mint GNS if people are winning, and they burn GNS if people are losing. But because people tend to lose more, it's actually deflationary.
Yeah.
So they've already like burnt a fuckload of GNS. I can't remember. Yeah, I read an article about it the other day. It's one of these. Yeah, the part 2 tokenomics of yeah, so combined supply. So that it used to be called GFOM, but they've now converted all those tokens to GNS. Yeah, so total supply 29 million, which I think tallies with this roughly. Yeah, 30 million total supply. They've already burned 9 million, which is 23%. Deflationary.
Look at the APY.
90% of the platform fees go to the pool. I'm not sure. Yeah, so that's staking. Yeah, the burn mint mechanism. When trader opens a trade using DAI, it goes into the DAI vault. When the trade is closed, any profits or remaining balance is paid out in DAI to the trader. Protocol mints GNS when total value locked in terms of DAI is greater than the DAI vault balance. This happens when there's a lot of winning trades. So payment of trades exceed the collateral added to the vault. The minted GNS will slowly be sold for DAI to refill the vault. Protocol burns GNS when total value locked is lower than the DAI vault balance by more than 10%. This happens when there's a lot of losing trades and incoming collaterals. The protocol uses the excess DAI to buy GNS and burn it. The 10% buffer is to limit the likelihood of minting during a period of several large winning trades without new collateral coming in.
You've gone over that. Deflation.
Yeah. So,
No,
yeah, the long-term deflationary nature of the token comes from the historical statistics that in the long run traders lose more than they win. So in terms of tokenomics, and it's just very
good, isn't it?
Very interesting.
Like I say, I've got that on my list on my spreadsheet, so it's funny how you've got that one. It's a good one.
It's a completely different model from like DYDX. Like think of this as like a high leverage casino, decentralized casino, basically, with exceptional tokenomics. I get the impression it's more aimed at like degens, like you can use insanely high leverage even on crypto. Up to 150x leverage on crypto, up to 1000x leverage on forex. So it's more like, no KYC required. Trading is done using DAI directly from, so you don't even need to own the assets. It's not like GMX and some of the others where you actually have to have the assets in your wallet and connect to the platform. You just need cash basically to go on.
Yeah, and you just get a token provided by the casino. It's
actually a really interesting idea, and it's just like an alternative to like DYDX, which is more of like a professional decentralized exchange that allows leverage as well.
I mean, this is what this research is about. It's about looking at the whole plethora of what's out there. It just in one small niche like PERP Dex, as you can see, it's really useful to know this.
Yeah, exactly. I mean, so there are some advantages to this model, which is like no more scam wicks. So, if you're DYDX and you use an order book, or let's say you've got you're an AMM, so you've got liquidity pools.
You can spoof the order book, can't you?
Yeah, exactly. If your liquidity isn't that deep, which any one exchange isn't going to be that deep. Whereas with this, you're just taking live price feeds from, CoinMarketCap and Binance, and so there are kind of some advantages. Yeah, and he uses the chain link decentralized oracle, which I think if you're going to get live price feeds, this is like one of the best ones to use.
Okay, to just do a quick pause. It's going to be 2 minutes.
No worries. 2 seconds.
Back in 2 seconds. Yeah, I agree. One for the watch list, and let's wait.
Yeah.
Either wait for a confirmed breakout, or most likely it'll break down, and it'll be a great one to average in, given them tokenomics and the its utility.
But that's just one of many. I mean, there's quite a few others that I haven't even got into. There's like this Woo, which looks interesting as well.
Yeah, I've seen this one mentioned.
Another couple I found like Apex Pro, and one called Vela Exchange. I mean, there's just loads, and it's just interesting. Like,
have you heard of
trying to get a handle on the different models and like what they all are really?
Have you heard of CHNG?
Yeah.
That's got like a really nice interface, hasn't it? I don't know the model exactly, but
there was something about that I didn't like. I think was it the tokenomics, but I haven't really done a deep dive on it. So, but I've heard some people mention it. Yeah,
that's it.
There was something about it. I can't remember. Yeah, Fusion Network. What the hell's that?
I don't know. It's only quite small. Oh yeah, look at the diluted market cap. Well, there you go.
Yeah, 6 million compared to 50. Yeah, I mean, but it's about the same as DYDX, that is, isn't it?
I know. So these are ones that seem promising, but again, probably to wait for the end of this year really to feel a bit safe.
Yeah. The other sector I'm looking at is options.
Yeah,
But I haven't got. I mean, I'm still working through understanding PERP Dexes at the moment, so I'm not really onto that yet. But there's a couple I found.
just
Ribbon's probably the one.
hit me with some names because I've got an options one on my list, but I can't remember the name.
The two names I've got are Ribbon Finance.
No, it's not that. Go on.
And Dopex, I think. This is one that Geordie dropped. Tokenomics don't look too bad, 53%. Again, I haven't actually properly looked into this yet.
What's the market cap of this?
It's only 97 million.
Fully, so it's about 50% diluted, is it?
It's got a decent chart, I remember. Yeah, it's about 53% diluted, I think.
Yeah, that's what you want to see, down only.
Yeah. Yeah, I mean, that's a big old drawdown there.
What is that drawdown?
96.
And what about to the wick? Wick to wick.
Probably about 97.
Looks very much like the DYDX chart. Isn't that
Yeah.
that formation it's doing at the minute?
That little W thing.
Yeah, it's just kind of
Yeah.
interesting.
Yeah, Ribbon. Yeah. Which one have you got on your list then?
I can't, because Excel's decided to bloody not work on the worst possible time, and I can't find it, and it's not one of the obvious ones that I've got on my watch list.
Yeah. I mean, there was one of these PERP Dex exchanges that I noticed did options as well. Can't remember which one it is. I'm pretty like early on in this whole process, to be honest. I'm not. Come back in a month and I'll probably know a lot more.
Well, we'll do some update videos this going forward because we've got plenty of time this year, I think, to be doing this kind of stuff. This is what you'll be doing with.
Yeah, absolutely.
I guess just on a similar tangent to that is DeFi lending.
Mm-hmm.
So if you've got options, you've got PERP Dexes, well, then you've got DeFi lending.
Yeah.
I don't know if you've come across that narrative.
Not really.
So I've got a really small one here that I've bought a tiny little bag, which we can talk about. So it's basically, John, if we switch the screen, are there any others on options or DEXs that you want to go over, or is they're the main ones for now?
Yeah, I mean, there's GMX is the other obvious one. I'm still trying to get a handle on that. I think that's like, see, I've heard that was like chain link price oracles as well, but I've also read that it's an AMM.
And again, the chart of that is rallied so strongly this year, hasn't it? Which
Yeah, that's what I was talking about. Always been kind of behind the curve a little bit. Like we need to get higher up in that information cycle, if you know what I mean.
well, that's it. I mean, you obviously you hear of these things on Twitter because they've been people made money and they're recycling that, and it's too late by that point. I mean, not necessarily too late, but you know, obviously we know we're near the bull, you know, the end of the bull cycle, or whatever. But yeah,
no, I think this narrative is going to carry on for forever, really. I mean, there's definitely a big place in the market for these.
but with what you've just said, the opportunity lies twofold. A, for the ones like DYDX or GNS where they've been wrecked, So you're clearly ahead of the curve with them in terms of a price perspective.
Mm.
Yeah, the minus 97%. Yeah, we can argue about tokenomics of DYDX or whatever, or DYDX, sorry, but that we're ahead of the curve in that sense. That they've just gone down only.
Yeah.
So you couldn't be any further ahead of that curve in terms of a price perspective, which is all that matters really. So
Yeah.
there's that, and then for the ones that have rallied, like GMX or what was the last one you showed us? The options one, was it?
The options one.
Ribbon Finance, was it?
Ribbon Finance, yeah.
So
yeah.
they've they're almost at all-time highs essentially. We're only at the start of 2023. If we're assuming the bull market's going to really kick off at the middle to end of 2024, then there's plenty of time for those ones that you keep on your radar. You let the price capitulate over the next year, hopefully, and you've got them on your radar to buy when they're at better prices. The one caveat would be, there will be a few of these that will just keep going up, like Quant or Chainlink, and you don't get that. But if that's the case, you buy on the retest of the breakout from all-time high if you want to play it with more of a momentum play.
Yeah.
So that's the other way. But I still think likely they'll come back down to earth at some point.
I think they will, yeah.
Well, should we if we've covered, so I think that's quite really good on PERP Dexes. That's quite a good framework for people to use.
Yeah.
Let's move on to some other bits and bobs that we've got, unless there's anything else on PERP Dexes or options that you've got.
Not really. No, I'm still learning.
That's fine, because like I say, we'll do lots more of these, and this is just a good. I guess we're laying down some framework. So we've covered PERP Dexes, we've got options on the radar. What was the initial one we spoke about? NFTs, NFT marketplaces, actual utility of NFTs like flow and ticketing. So we've got NFTs, PERP Dexes. So the big other narratives I reckon are AI and data, which we can talk about. And I've also got a DeFi lens in that protocol I want to talk about. Maybe go on to AI and data.
Sure. I think I know which one you might mention, but it could be.
Let's switch the screen around and I'll let you guess. Oh, share screen. Here we go. Let me get it up on. How the devil do I move that? Not so simple as that. Right. So the first one I want to talk about is GRT, the graph. Have you come across this?
Yeah, I mean, I've heard of it. I don't know anything about it.
So AI and big data is the tag, and we can go into a little bit of the fundamentals here. Some of the founders of this were quite interested. People from the Ethereum Foundation and Decentraland. And MuleSoft as well.
Yeah, it's quite a well-known one, isn't it? Quite.
It is, and this is again why I like this. So it's 63 rank. Tokenomics are excellent. So you can see there it's nearly fully diluted.
Yeah.
It's basically half a bill at the minute, just over 581 million if it's fully diluted. So excellent tokenomics. But then, so we've got that. The fundamentals I'll let you guys look into a little bit further. I'm going to cover it more from a chart perspective. But again, look at this bad boy. So we've got lovely declining volume. I mean, if we put it on a linear chart, I mean, this is a classic capitulation, dead cat bounce, just dead. And now we're just flatlining, or it's, just rounding off now. Probably up until, could well be until the next year, as we've got marked here with the halvening, and we'll anticipate the end of the next cycle. So if we go back on log, Again, this peaked in the first stage of the 2021. Down to the bottom, minus 98%. I mean, it's pretty damn good. Again, we've got, it seems to be a clear 1, 2, 3, 4, and a 5 in formation. So again, if we just do an extension, just try and work out where the golden ratio is bang on where we are. So yeah, there could be more downside, but for me, I'm pretty happy. This is why I've started buying, because he seems to be 5 waves down. Maybe this has got more to go, but we're already minus 98%. Again, back to all-time high, 50x nearly.
Yeah, that's pretty attractive.
If we can do a golden ratio extension, that's where I've got my little moon, trusty moon up here. So we're looking at about $30.
Oh yeah.
So what's that? 600x, is it?
Jesus Christ.
I told you to forget your 200x. Yeah.
So just to be clear, you're saying go all in on this one now, right?
Yeah, I'm saying this is financial advice. You should all buy it right now. And clearly don't. Someone will probably, well, not that anyone watches these, but in the future, someone could crop that.
Yeah.
And put me behind bars, but you know, take me away, cuff me now.
Yeah.
Arrest me. Sorry for giving you such a good tip off.
Go enjoy an SBF in prison.
Yeah, pretty much, and take it up Browntown and up there. But no, I mean, look at this. I mean, where would that be? 600x and where we are now, a 500 bill. You know, I mean, that's getting silly maybe, but you know, it'd be a 300 billion market cap essentially.
What does it do? What's the so it's AI and data.
AI and big data is the theme.
Right.
We can read into it more detail in here. I've not got anything more sophisticated.
Yeah.
The protocol for querying data for networks like Ethereum, which powers many applications in both DeFi and the Web3 ecosystem. Anyone can build and publish open APIs called subgraphs, hence the graph. Applications can query and retrieve blockchain data. So this service makes it easy for developers to get started building on the graph. Supports indexing data for Ethereum.
Yeah. I think data is going to be a big thing. You know, data kind of rules the world, isn't it?
There you go. To ensure economic security of the graph network and the data being queried, that's where the token comes in.
Yeah.
So I guess it's work that needs to be done, isn't it? There's obviously data that needs to be indexed and organized. These different blockchains, and essentially this is what this does.
Yeah.
And, you know, there's sort of tokenomics based on that, of how that job effectively is something that you can earn from. I need to do it more. I need to look into this in more detail. But again, just I've looked at these really broadly. Some of them. This is one where it's just got such an attractive chart.
Yeah.
It's got a decent, you know, it's a 500 million market cap, yet it's down, you know, 98% with a 50x upside back to the all-time high. You know, even if this was a full degen play and you don't know what the hell it's done, you know, it's it's still attractive from that perspective. But I do think anything in the AI and data field is going to be a big one.
I think fundamentals is definitely still important, like, because I think there will be a lot of charts in crypto that look like this that just never really make a comeback.
No, they won't. I mean,
there has to be an altcoin, some kind of an altcoin reckoning where probably just a load of the shit coins that look like that now just you know, that's kind of it really. So I think a chart like that is great, but I think, yeah, that combined with the other things like the tokenomics, the narrative.
Well, you can list them in that sense, like it's chart, it's tokenomics, it's fundamentals, and it's utility. I mean, this scores incredibly high on charting. It scores incredibly high on tokenomics. The use case seems positive. AI is a really big growing space. Now, I think I'm just trying to find how do you find the categories on here? Because I think it's one of the biggest. Here we go. How do you see all of these
filters?
Categories. We've got options. Let's have a look. It'll be easy just to search it. How the hell do you do that?
What category are you looking for?
There we go. AI. Let's put data. AI and big data. Here we go. So there you go. So it's the top of the list. Obviously, Ocean Protocol. No one know about that one. I've heard this one, FET, being mentioned. Singularity is the Ben Goertzel project. I'm trying to think if there's any others just off the bat. So they're the ones I know straight away off the bat for AI and big data. But I mean, it's the top of this list. You know, certainly interesting at this stage. You know, certainly go and look more into it. But
yeah,
I think for now, that was enough to satisfy me to put it on this list with the tokenomics, the chart, and the fact it's the top of the list for this category of AI and big data, which seems to be a big one. You know, that seemed enough just to warrant it without knowing too much of the fundamentals.
Yeah.
You know, obviously it's at the top of that for a reason, I'm guessing, because it's not been, I mean, when did it come out? It only came out in 2021. You know, so
yeah,
something that definitely warrants more research.
Definitely, yeah, that's definitely one to add to the list to look into. Yeah, I mean, it's basically like this. The tokenomics takes care of the supply side of things. And then basically then you just need the demand, don't you? I mean, if you got the tokenomics are as good as that thing, and then you get the weight of demand, which could either be from actual utility or just narrative, then you're laughing. Basically.
And that's a lot. I mean, the narrative can be based on future utility. Doesn't even have to be current utility. It can be just future utility. You know, think of XRP in the 2017 run, or just think of you know, a lot of the NFT projects last cycle or metaverse, they weren't the real deal, but people were just getting excited of what they could be.
Exactly. Which, to be fair, is most of crypto at the moment. Let's be honest.
Exactly. Yeah. So I don't. It doesn't bother me. I don't really care. Like, I'm here to make money. I'm not. You know.
Yeah.
I'm not here necessarily to see it all the way through till it gets full adoption in terms of all you need, you know, from the way I see it, I've already kind of done it already last cycle, is you just need to play one cycle well and it'll change your life.
Yeah, exactly.
And it did. The last cycle did that for me. I mean, I can do, you know, I should have done a lot better, and I plan to do it this time, but
yeah,
it's, you can always do better, but all you need to do is play these cycles properly, and this is what it's about.
That's it. Buy low, sell high. Simple as that.
Exactly. I mean, look at a chart like that. You know, it's at the top of AI and data. You know, the chart is as low as you can possibly get, virtually minus 98.3% or something. You know, we can argue, is it going to go lower? Probably, yeah. But I mean, Christ, it's a hell of an opportunity. If you want to, you know, start your AI and big data bag, why not start there?
Yeah, definitely.
Um,
That's a good one.
yeah,
That's a good one. I mean, that's another thing. Yeah. So, I mean, yeah, if we just do a broad overview of narratives and categories. So we've got PERP Dexes and options, which we've covered. We've got AI. So I think that's a good immediate narrative that's kind of applicable now. And we're probably, arguably, we're already late to the party on that. Then we've got like AI, big data, which I think is definitely going to be a big theme at some point. Like that will be a narrative at some point. More narratives that we need to talk about. So
options could be explored.
Options, yeah, options.
We've got DeFi lending.
DeFi lending. Okay, I don't know much about that.
I've got one here actually that I've started to accumulate.
ClearPool.
Yeah, CPOOL. Yeah, I mean, I'll quickly just flash it up on here again. I haven't got loads of fundamentals on this one, but it's just one I've heard a little bit of buzz around. 665. Tokenomics aren't amazing at the minute. It's 30% diluted currently, but even fully diluted, it's only 30 million. So it's a tiny project. I just found that the DeFi lending interesting, and just the fact it's got a bit of buzz even at this stage, given its chart. So it's not like it's been pumping. Yeah, I've still managed to hear several different people mention it, which warranted me just to look into it. Need to explore the fundamentals a little bit better, but again, just from a chart perspective, down to that low again, nearly minus 99%. I mean, currently where it is now, minus 98.68. There's basically 99% there on the low. Nice decrease in volume. It's pretty stagnant on the RSI. Again, just have a bit of fun here. Upside back to all-time high, 70x. You can use your imagination if it went and went past the all-time high, but the point still stands. Like, yeah, some of these will die, but I mean, from my experience being in the last cycle, what tends to happen is, this will, I can sort of draw it, even if it dies, it will, just kind of do this into the halvening. And then the worst case is it'll probably do something like that, and then die from there. But even just back to here is, what's that, 25x?
Yeah.
Again, these obviously need far more research, but the point, just trying to make is there's some incredible, on varying risk. The thing is, I wanted to discuss different risk curves. So you've got the ones that are sort of safe plays. You talked ALGO. Obviously you've got Quant and all those kind of plays, Ethereum, that I would see as much lower risk. You go further out in the risk curve slightly. You've got projects like GRT, Lux that we've covered today, and Flow. They're all around 50 to 60 on the market cap ranking. But again, those have 50 to 70x upsides to the all-time high. So I think that's really like the sweet spot that I'm looking at. It's quite a nice sweet spot. And then beyond that, we've got the ones into the hundreds and thousands. Like, you showed GNS that's 2,000, I think.
Yeah. I don't think the ranking on CoinMarketCap is necessarily the most definitive way to define the risk, though. I think there are plenty of like shitty ones in the top 100 and plenty of like really strong ones that are like below 1,000.
Sure.
But yeah, I mean, it's definitely something to look at.
Well,
I wouldn't kind of hang my hat on that.
The point stands that the higher the market cap, the greater the network adoption, essentially.
Yeah.
And so the more network, if you extrapolate that, Bitcoin's in just in a crude way, they're probably the lowest risk. If you take out all the PSYOP and CIA and David Schwartz created it and all that kind of stuff, if you just look at it for what it is, which is network adoption, it's the lowest risk in terms of the fact it's got the biggest network adoption. You know, which means its upside's more limited, but it's down, you know, do you know what I mean? Its risk is lower in that context. I'm not saying you're right, there is some shit in that top 100 that probably is a bag of shit and will die or whatever. And I totally agree. And there'll be some like that are in the thousands that clearly they don't stay in the thousands forever. You know, they would have been there at some stage.
Yeah.
And now they're in the top 10, for example. I mean, you can think of loads of projects that started so low down and now they're really high up, you know, and that's obviously the natural way things progress.
Yeah, no, you're right. It definitely adds confidence when something's like in the top 50 or something, and you like the project anyway. But it also is that high up, then that definitely, like, there is always that question mark when they're a bit lower down. I mean, ideally, you want to catch them when they're low and see them come into the top 100, top 50, that kind of thing.
And this is the point of today, is trying to like pigeonhole a load of these different projects.
Yeah.
You know, we've gone from rank 10 to rank 2,500 there, just in a very quick pit stop on each.
Yeah, exactly. I mean, the other narratives I think are going to be important. One is layer twos.
Yeah.
On Ethereum, as I was saying, like, I think as things stand, you know, Ethereum is the #1 smart contract platform by some margin. And yes, there are going to be competing L1s like Algorand and, you know, Nia and, you know, there's loads of different ones. But as things stand, most of the innovations going on in Ethereum, and a lot of these dApps that we've been talking about, these PERP Dexes, are built on layer twos on Ethereum. So I think that's going to be a big one. Layer twos. And again, I haven't really dived into the fundamentals of these yet. There's a few like interesting things that I've come across. So I think that's another big sector to be looked at.
Yeah, L1, L2's I've had a few on my list. Some of the smaller projects in those, but again, so annoying we can't get hold of the list. But I think what we'll do is any ones that we've got on the list that we've not covered today, which should be quite a few, we can put down on we just release on Twitter after this.
Yeah, exactly.
I think the ones I was most excited about, just in terms of the perceived sort of category narrative, and then the, you know, the sort of fundamentals and tokenomics and the charts, I've listed my favorite ones for now.
Yeah.
But again, I think the big caveat is majority of these next big projects will come out probably in 2024.
That's it.
I mean, if the last cycle is anything to go by, and it does make sense.
Yeah.
You know, if you had a project that was backed by VC money, why would you release it now? Like, you know, you're going to release it when the thing's ready to launch.
Yeah, exactly.
You know, and again, for me, just if we just always come back to the fundamental Bitcoin chart, I mean, it just makes, you know, if you think of the halvening, you're back above the moving averages, you're preparing for launch. You know, again, back above the moving averages, preparing for launch. You know, maybe it'll be different this time. Maybe it will. But, you know, for me, it looks fair. This whole downturn has been extremely similar to the last two. I mean, look at it, even when you trace it on top, it's almost identical. Let alone you can just look at it and visualize those down, you know, wedges that we're in. You know, for me, it just, you know, that global liquidity index we showed, that seems like it's about to turn around in 2023. It doesn't have to be overnight, but over the next year. And again, looking at these charts, you can get carried away, but we're talking big time scales, aren't we? This is, you know, end of 2025. This is like nearly 4 years away, isn't it? Or 3 years.
Yeah, nearly 3 years, which is a bloody long time. But you know, Rome wasn't built in a day.
No, it wasn't. I think that's the thing to mention here. So as we go into the grind, the grind I would say is all this next year. We could spend the next 9 months just bottoming down here like we did in this cycle, or we get a more of a drastic pump as we did in here, where you get a big relief back up to here somewhere, which obviously would see some alts rally, or we get a combination of the two where it's kind of in the middle.
To be honest, I mean, 9 months of sideways now would be an absolute gift.
I know.
Well, it'd be such a gift. It
It,
just
it,
gives us time to position ourselves, basically. I mean, if we start pumping this month, then it's kind of like a bit soon almost, really, because we're not ready. Well, I'm certainly not ready.
yeah, you're right. I mean, what I would say though is even though this pumped heavily here, so basically we went sideways and then a pump, or here was pump sideways, obviously COVID and then pump. Even though Bitcoin did this and ETH did this,
yeah,
there were a lot of alts that just made lower lows all the way until here, like Mana, XRP, but Mana was the big one because that went on to do a golden ratio extension and did 200x from down here somewhere. So that's the thing. Like, so only because Bitcoin's moving up doesn't mean all the alts will be that are going to do well in the next cycle. And also, again, if most of the alts backed by VC money come out after the next halving here, even though BTC could be at 35k, summer of 2024 we could be looking at 35k BTC, which is over 2x from where we are now. Doesn't there will be brand new projects that are about to go 100x from here.
Well, that's it. Yeah, even if we miss like all of every opportunity in the next 12 months, there's still going to be a load more.
I mean, that's what my personal thing is. So this is the way I've always seen it, is that still preserving your capital is key. Just for this whole next year, even though there will be some moves up probably. If you had to, if you had to guess, we'll probably have some nice moves up and down, but there will be some moves up. They're still, to me, largely just a distraction.
Yeah.
Like the big events are likely to unfold in 2024 and 2025, and that's really when you want to be positioned and for game on. I think this is what I call phase one. So phase one, you can take advantage of moves like this, or certain alts might do something like that. You can take advantage, but for me, it's more just preserving capital. If you can double some of your stack, in Bitcoin or something else, fantastic. Gives you more ammo to, what I will be doing is exiting all of my Bitcoin post halvening probably, and rotating it into the alts that have got the narratives, and that's always been my strategy.
That's it. You want to, once liquidity starts to flow back, whenever that is, you want to be kind of clued up enough to kind of know about the new projects coming out that have the narrative, the fundamentals, tokenomics, and then you just kind of execute, and that's where you're going to make huge gains. Which is why it's so important that you don't wait until then to start learning about these projects. Like we need to be way ahead of the curve.
You do, because I mean, this is the big mistake I made in 2019 and 2020. Your brain turns to mush, you're beaten up.
Yeah.
You lose a bit of interest and focus, and that's what really costs you, which is I'm doing the opposite this time. I'm just getting even more focused and more working harder, because
absolutely,
this is the time now. This is the time, because we've shown you some charts there that are so attractive. Yeah. And like you say, it's more the fact that you've got your ears to the ground now. Yeah. Whether you pull the trigger on some of those plays is irrelevant, really. It's more just having your ears to the ground. You're creating a network on Twitter, which is what I've been trying to do. Just to have as many people to to talk with as you can.
Yeah, that's it.
You've got an army of you searching for the latest narrative.
Yeah.
Because that's what's going to drive the massive returns going forward.
Yeah. I've been enjoying those chinchilla threads. Have you reading them?
No, I think I used to follow him. I'm not sure if I do on my new account.
Yeah, he's done some pretty cool threads. One was about the options narrative. There was a thread as well about a load of different reports for like 2023 crypto outlook by like various like
some of the funds.
institutions, and
Yeah,
I think that's one of his threads. Can't remember, but
yeah, I saw some from like some of the hedge funds and
yeah, exactly. And the consensus, I mean, DeFi seems to be one of the main consensus that I'm getting from listening to a range of people talking. Like DeFi Summer Part 2 kind of thing, which makes a hell of a lot of sense given what's been going on with FTX and all that.
And
So,
God knows what brand new, narratives they'll develop. Like I had no idea what an NFT was in 2018 or 2019.
No. Yeah, well, that's it. There's going to be new things like that for sure.
But ultimately, a lot of those things were being built at this stage of the cycle last time 4 years ago. And this is why you want to keep your ears on the ground for the new narratives. But they're the ones that seem to be, like you say, DeFi, NFT sort of utility of them, AI and data, that kind of thing. Is PERP Dex's options would be a big one.
Yeah.
They seem to be the themes that keep popping up for me.
Yeah. I think metaverse as well at some point, or
of course, and gaming, obviously.
Yeah.
But again, all of these things essentially were narratives of the last cycle, which is why I'm a bit cautious, because there will be brand new narratives that we can't even imagine currently. I certainly can't at the minute. But
yeah,
I guess NFT utility, marketplace, different decentralized marketplaces for NFTs like Lux, different like ticketing. I think it's a massive use case of NFTs. So it's kind of building on top of the work that was done in the last cycle.
Yeah.
To actually proper real life utility for things.
Yeah.
Which essentially was what happened in this run in 2017. This is when ETH was bought. But it wasn't until this cycle, until all the projects built on top of ETH, really started to develop. So you can think of it in that term. So the foundational network or technology of ETH was built here, but NFTs and DeFi built on top of ETH was ripped in here. So the point I'm making is, well, if NFTs were built in here, the utility of NFTs probably explode here. So like you said, the technology of DeFi was recognized here. Some of the different use cases of DeFi will be, blown up here probably. Same with metaverse. Metaverse as a technology or an idea was kind of built here, mainly. There'll be more intricacies and more developments probably in this space here.
Yeah.
As well as brand new narratives.
That's it. Yeah, that's it. I mean, I think, at the moment with rates high, I think something like DeFi is going to struggle because, there's kind of less incentive to lock your money up on some DeFi protocol at the moment when you can get like 4% or
on treasuries.
Yeah, exactly. So that's something to consider as well. Like in 2020 when rates were close to zero, these kind of high yielding staking pools and all that kind of stuff are obviously like a revelation, which kind of explains that explosion in DeFi. And let's be honest, that's probably what drove it, not the kind of the utility so much. Probably more the APY and stuff like that you could get.
Of course.
Like we were saying, like everyone needs to be incentivized at every level for this thing to work. So yeah, I guess that's why the macro is important. But
bring it on, bring that liquidity turn. Chinese are leading the way.
That's it.
China's on the dark side of the moon.
Yeah.
Yeah, let's bring some liquidity back. We'll see what 2023 brings. Probably, like we say, bottoming out, an uptick of liquidity to then go into 2024. A lot more work to be done there, isn't there? And
yeah, that's it.
yeah, I'm sure as usual we'll be doing more of these and lots of activity on Twitter.
Yeah, it's a shame we couldn't get that list.
We'll
got some written down that I've forgotten about, but
what we can do is on Twitter, we'll just release the list individually.
Yeah.
Then,
to be honest, I still need to do quite a bit more research before I release them, I think, because a lot of the ones on the list are just like names that I've just come across, but I don't really know that much about. So I think, yeah, this next month, I'm going to really try and, yeah, really look into do a proper deep dive on these projects. And then
my guess is we've got at least till the halvening, because even if they move up to 300% from here, most likely a lot of them will come back down to earth by the next halvening. And so, we've got plenty of time to, just to get this shortlist together. I mean, for me personally, the ones that are down 98+%, I'm buying now because why not?
Yeah.
If they go down to minus 99%, I'll buy more.
Yeah.
As long as, like you say, they've got, utility, they've got reasons, not just the chart to buy, the tokenomics to sell. But for a lot of them, you can just buy them throughout this year, probably whenever it's in a good zone. And
you can always change as well. Like, just because you buy something now doesn't mean you can't flip it into something else in a month's time. If you buy something down 98%, the chances are you're going to at least make a return on that in the short term. And you could decide in 6 months that you don't like the project anymore and you actually want a different project, and there's every chance that you've probably made a return on that anyway.
Yeah.
So it's kind of, I guess you don't need to be too scientific about it.
This is kind of mainly my approach at the minute. Is like, I think really it's the big narratives they'll be evident by this time. Well, a year and a half from now, really, or around the halving. And these altcoins I make, the tiny positions within my portfolio. I've still got lots of cash. I've got lots of Bitcoin.
Yeah.
Because I see that as a solid play for phase one. If you can get a 2x on your Bitcoin between now and 2024, which I think is definitely doable, it sets you up with a bigger bag to allocate to some of the developing narratives when the time comes.
Definitely.
In the meantime, these smaller projects, which are more high risk, in my opinion, you allocate small funds, but if they do go back to all-time high and do 50, 60x, it doesn't take, you can do the maths in your own head on what you're prepared to allocate. But
yeah, you don't need to allocate much to make, some big gains.
Let alone if some of them go on beyond that and actually go into the fib extensions. That's when you get into the realms of silly money, really.
Yeah, and that's where there's the exit strategy. Then the whole strategy is around how to exit, then, isn't it?
I think the big thing I've learned is, let's see how it goes, but for me, the exit strategy will be not really price based, but time based. In the sense of, let's see how the cycle develops, but if we largely follow what we've done before, I'll just quickly rip this one and put this on top here, just so you can see how similar. This moved higher, this was lower, but it met at the same point at the halving. And you know what I mean? They're the same thing to me. Like, they're slightly different, obviously, but they're essentially the 4-year cycle. So it's more based on time. When we're getting towards the second half of 2025, and prices are high, you better be damn twitchy. You better be damn twitchy because, fine, some projects could still do 20x from that point. But if you've bought in, some of those ones we said today, and you're up 70x, 200x, 500x, bloody hell, who cares? Like, you better be capturing the meat of those moves. You know what I mean?
Don't be greedy. I think that's a big lesson. Yeah.
But to me, like, I'm playing, it's your time horizon of investing, isn't it, is the key. And for me, the time horizon is the end of next cycle, which you got to guess now, gun to your head, it's, probably autumn 2025.
Yeah. I mean, for me, I think the whole Bitcoin 4-year cycle thing's probably gone. I think the liquidity cycle, the business cycle, that's different. Obviously, that's.
But I think this is
fundamental.
I think this is what's ultimately driven Bitcoin. I mean, Raoul Pal talked about this. It appears that it's the 4-year cycle of the halving of Bitcoin, but it just so happens that perfectly correlates with the 65-month global liquidity cycle.
Yeah, exactly.
Which I showed on that chart before. It's exactly correlated. Like, so you think, oh, it's always the halving that's the big thing. Well, yeah, the halving is a big factor, but then, like you say, liquidity is the biggest factor.
Yeah.
That has to be the biggest factor.
That's what we need to be monitoring, forever now.
Yeah, exactly.
I mean, it's crazy to think that. Yeah, I didn't even know what the M2 was like a year ago. I was just completely clueless to all this macro stuff. But really, you're gonna get wrecked if you're that ignorant. So I think, from now on, we know what to be looking out for.
That's it. And like I say, the business cycle and the global liquidity index looks pretty ripe to me. I mean, the ISM is down to levels not seen since the .com and the 08. So yeah, it can go down a bit more, but if liquidity is turning up in China, ISM's that low. I don't know. To me, 2023 is about staging a recovery, and it doesn't have to happen in January. Maybe we go down more for the Q1, but I'm talking as the year as a whole. 2022, everyone's been beaten up. I think people are expecting an 08 or a .com star crash where we get beaten up for the next couple of years, maybe. But I don't think so. I think we might get beaten up in terms of time, but not necessarily in terms of price. It's more time capitulation rather than price capitulation.
Yeah, very possibly.
Maybe that obviously could be damn wrong. It could be, but you got to go with what you think at the minute. And like you say, if it is the worst case, if it is more price capitulation from here, then as long as you've got an income and you've got cash on the side, which you both have, then you're in a good position either way.
I think that's it. That's it. Just try and be prepared for all scenarios, really. I think tread lightly now, be cautious, but definitely the time to start scaling into some of these heavily discounted alts that are tasty fundamentals as well. But yeah, obviously cash should probably still be your core position at the moment. And then having an income is even better. And I mean, I'm hoping this time in a year, things will be better. Well,
like I say, let's see where, according to my trusty chart, in a year's time, we're looking at price there being about probably 27k maybe. So not quite double from here. Probably by the halvening, probably double from here.
Yeah.
On the BTC price, let's see. Maybe something different happens.
Yeah, I mean, I think it will. I don't think all models are wrong. Some are useful. I think obviously it's not going to play out exactly like anyone expects, but that's why we DCAs, because we're not sure.
No, and ultimately no one is.
Yeah.
And no one's ever 100% sure on anything in life, let alone invested. But you just got to take an educated guess using all the information available to you. Like,
that's it.
It doesn't take an idiot to look at those charts just from that point of view You know, if you're going to buy Algo and you wanted to buy it, why not buy it when it's the lowest price it's ever been virtually versus when it was like near the top?
Yeah, exactly.
Like, which is the better risk reward? Like, if you believe in the project,
Mm.
you know, it was pretty damn obvious.
Yeah, these things are going to take time to play out. Like Algo, you know, Algo has a huge amount of potential to be like, you know, reach some kind of mass adoption in some way, probably institutional, you know, adoption. But that's not going to happen in the next year. It's probably not going to happen in the next 2 years. You know, it could take 5 years, it could take 10 years. So, you know, we just need to be like, I mean, no one knows where the bottom's going to be. So why not start now? Like you say, we're already down 90 odd %. You know, now's a good time to start. And if it goes lower, then great. You know, just buy even more.
Yeah, buy when there's blood on on the streets, even if the blood is your.
Exactly. And there's definitely blood on the streets. Yeah.
But again, it's all about your time scale. Like you say, you got an income, you got cash. You know, for me, my time scale is the end of 2025.
Mm.
Yeah, that's where I'm anticipating the full, you know, as the chart shows them, the full moon shot to be. So, you know, it could be well before that, a bit like how here the moon shot basically came at the end of, well, the start of, which would be the start of 2025, according to, you know, if we did it 4 years on. So somewhere in 2025, you'd expect us to be pretty damn good considering the buys you can make from here.
Mm.
Maybe that's wrong, maybe, you know, but for me, that's got to be the base case.
Yeah.
But, you know, let's see. We'll see. It'll be quite funny to look back. Can certainly come back to this video. Probably come back to this in a year's time. Let's see where we are in a year's time for a start.
Yeah, well, hopefully better position. You know, because
and even if we're not, even if we're worse, which we could well be, who cares? Because we're not even at the halving at that point.
Yeah.
You know, I'd be worried if we're at this point in 2 years' time at the start of 2025.
Yeah.
We're in nowhere. That would be more concerning to me.
Yeah. You know, it's been a good lesson. I mean, you know, I've definitely learned the true value of money and the true value of time. Just, you know, from having to work so hard. Like I've never worked so hard in my entire life as I have this in 2022 in terms of just like, you know, selling your soul and slogging it out. And that's going to make it so much sweeter. And I'm already kind of, you know, I'm fantasizing about being able to, you know, cut back my hours or, you know, go part-time or even just retire. And, you know, kind of in 2021, I'd had it way too easy up to that point. So I just didn't, I was gambling away all this money. I didn't really understand what it was worth.
Yeah.
You know, whereas now I know exactly what it's worth because I'm having to actually work for it. So yeah, it's been a good lesson. Yeah, keeps you humble.
Yeah, I think that's the best thing to be. Keep humble, keep stacking, and keep keep the eye on the prize, basically. You know, lots to be done, lots to look at, but it's certainly building in this space. Yeah, I think that's got to be the plan. Obviously, there's businesses and other ideas outside of crypto, but in crypto, then you know, this is where we're at. This is what we're about in this channel.
Yeah, I mean, you got to define your box, haven't you? I mean, even within crypto, there's like you can specialize in certain areas. You know, you can't. I think crypto is a pretty good box to put yourself in at this general time.
Well, I mean, think of it. I mean, it's basically growing at faster the rate of the internet. It's only a couple of billion users. I mean, we're basically still where we were in 1996 in regards to the internet.
Yeah, I don't think there's anywhere near 2 billion users though.
Sorry?
There's nowhere near 2 billion users yet.
No, 200 million.
200 million, yeah, exactly.
So that's the point. It's like, well, think where the internet is now. And think about 96 or 97, and that's essentially where we are now.
Yeah, exactly.
You know, I know Gareth always seems to say we've had the .com moment. I don't think we have. We certainly haven't in terms of the number of users, mate. Like,
Yeah, that's true. I mean, even if we have, like, what did the internet do from post 2000? Do you know what I mean?
yeah, exactly.
Like, in a way, it'd be good if we have had that moment, like, wash out a load of the shit, and that's kind of where the real games start.
Mm.
It's just about trying to identify the Apple or the Amazon or of the crypto space, and if you do that, then you're going to be very wealthy.
Yeah, and that's it. That's why we're here at the end of the day. I mean, that's why we're working, looking at all this stuff. It's just identifying all those projects on different parts of the risk curve.
Yeah,
You know, and let's ride them up
that's
over the
it.
next couple of years. It's going to be, yeah. I personally have been feeling euphoric for a long time now. For the last probably couple of months, it's been a feeling of euphoria of just like, which is good. I mean, I think that's when, I don't know. I think you'd much rather feel euphoria now than you would when Bitcoin was at 70K.
Yeah,
You know, and what I mean by that is, yeah, we can go to 10K, yeah, we could go to 5K, we could do something crazy, but I'll just feel increasingly more euphoric, I think, as we go down, because you can see the size, the opportunities just getting bigger and bigger and bigger. And so, hence the euphoria logically should grow. Because if
yeah,
you believe in something, then surely you know, it's like Gareth always said it best: when you buy a pair of jeans that you like and the minus 80% in the sale, you should feel euphoric.
yeah,
Why would you feel euphoric buying the jeans at full price, like fucking God knows how much money, like for a pair
yeah,
of jeans, when you can buy them for 20 quid or something, or 15
yeah,
quid for like an
exactly,
amazing pair of jeans?
exactly.
You should feel euphoric about that. And yeah, if they go down, if you bought the jeans at $20 and they go down to 15 or $10, you should feel even more euphoric. You get even more.
Yeah, I think that's it. I think once that'll be it feels great to buy at low prices, and I think I'm not really feeling euphoric at the moment because I still know there's so much work to be done, and
Yeah.
I don't want to get carried away. Even though the prices have down so much, I can still fuck it up. I can still miss the boat. I could still choose the wrong project. I
But
think once I've done that research and I've actually got some positions, I think then I'll start to feel a lot better.
the point is, mate, that you're working hard, you've got an income and you've got cash on the side.
Yeah.
So, like you say, I think the euphoria I'm referring to is just more about the opportunity ahead.
Yeah. Yeah.
You know,
Yeah.
when you look at this chart like that, and we're basically here. If we're sort of here, here, it doesn't really matter where we are on this chart. We're somewhere roughly down there.
Mm.
That's exciting. Like, yeah, we could go all the way down to 10K here. So what? It's the same, you know, 10 here. Who cares if you got it here or here? It's like, it depends what game you're playing. If you're a short-term trade, obviously, it's a massive difference. Whereas if you're building a value position, like if you're a value investor building a position,
Mm.
you know, these are attractive levels, like no doubt. And, you know, we come down to here even more attractive, buy more.
Yeah.
You know, so yeah, like, you know, I think it's very, very exciting.
Yeah. Yeah, I agree.
You just have to have that vision to see it through. And I think that comes with the experience of being around like a few cycles. Like,
Yeah.
you know, when you're in 2021 and everyone's wanting to buy up here, it's exciting, but really it's madness.
Yeah.
You know, as everyone thinks it's madness to buy now.
Yeah.
It's the recession and the macro and the rates and God knows what else.
Mm.
There's always something.
Yeah.
There's always, you know, it's the same here. You know, I guess that was more intrinsic problems around Bitcoin probably here. You know, maybe even here people worrying about is who cares about Bitcoin, but I don't think there's any problem about does anyone care about Bitcoin now. It's more, oh, is the liquidity going to turn up to help us go up?
Mm. Yeah, and I think that's why we're probably going to get time capitulation now, because I think there's been so much selling. It is hard to imagine how we're going to get another massive wave of selling unless something crazy happens.
Mm.
But at the same time, like you say, people have had the fingers burnt. They're not buying. everyone's been super cautious. So I can see, you know, it's like, well, what's going to drive the next bull cycle at the moment? Well, you know, it's hard to imagine. So, you know, sideways makes sense.
Mm.
Accumulation, or just general kind of, you know, low volatility. I say low volatility. I mean, we could still have a lot of volatility, short-term volatility, but like in terms of like macro volatility, you know, we could go down to 10K, back up to 30K, back down to 10K. That's obviously very volatile, like for a short-term trader, but in terms of the macro, that's still basically, like you say, it's sideways, isn't it? So
yeah, I mean, it's largely what this chart says. I mean, 10K is the bottom here.
Yeah.
30K, well, that's higher than 30K. That goes to 45K.
Yeah.
But essentially, that's down. That would be sideways, and then we get up.
Mm.
So even up, like you say, to me, I see that as sideways on a long enough time horizon like this.
That's it. Until we get back above Turner's level.
Yeah, the great Turner's level, which I think we said was
42K. Yeah.
30K, isn't it?
42.
Or was it 42?
Yeah.
So I'm gonna have to go on the weekly. It's been a while since we're at Turner's level. Oh, it was that one, wasn't it? 42K.
Yeah.
That was it, because it was the top here. It's we sprung off it here. Then we challenged it here.
Yeah.
Shut the bed, got back above, and then really did shit the bed.
Yeah.
Turner's level got. It'd be nice to see that one again.
All in good time.
That's it.
Yeah. But yeah, I think, let's keep our heads down, smash it.
Time for a ribeye for me, I think.
Yeah, that sounds pretty tasty.
Yeah, ribeye, and then gonna be doing some bench press later.
Nice.
Back in the gym.
Nice. You've been doing a lot. You've been keeping it up.
Well, I have been throughout the year, but it's just the last few weeks I've had like this cold that seems to have lingered for ages.
Right. Yeah.
Had a little bit of time off over Christmas and stuff.
Right. Okay.
But yeah, feeling good. Can't wait to get back into it.
Yeah.
I think I've got a squat PB to do on like a rep PB to do on Wednesday.
Really? Wow.
Building it up.
Yeah, I need to get back into it at some point. I've been off it. Yeah, mainly problems with shoulders, and then also just time because of work and everything. Just falling off the wagon a little bit.
No, it's hard, isn't it? It's just something I refuse to let go. I need it.
I know.
It's very hard when you're working hard. It really is.
Yeah.
Thing is, even if you're not making massive improvements, as long as you're just doing something.
I know how much better you feel when you're working out. Like my appetite has dropped. Like I'm probably eating half as much food as I was like a year ago, which is crazy. Like my appetite's just dropped. So, you know, I know
2023. Switch it around. Okay, again, the reason it's so important is for this as well. I mean, for me, that's the way I see it. Like you got a healthy body, you got a healthy mind. If you've got a healthy mind, you're going to execute this far better than if you didn't. I think it's that holistic approach. Like,
yeah, I agree.
You know, healthy body, healthy mind, and you're going to perform better in the markets. I know you'll get some people who probably think that's stupid, but you know, I've been largely like healthy and athletic my whole life. I spent a brief few years not, and everything I suffered massively. You know, so just what works for me, like keeping fit, strong, healthy.
Yeah.
You know, sleep on point, everything on point. You're going to perform your best in all aspects of life. So
yeah, I totally agree.
But it doesn't mean it's easy. It's not fucking easy to do.
No, just gotta do your best. Yeah.
And then some time for Beatlemania when you can.
Yeah.
But yeah, I think well, it's lunch, isn't it?
Yeah.
Epic New Year's bonanza.
Yeah, for sure. I think let's have another one of these in a month, and you know, I'm gonna have a lot more to bring to the table in terms of alts in a month's time.
Well, we've got a good foundation today. We've got some narratives. We've you know, filled it out a little bit. I can maybe find some more fundamentals, you know, in a bit more detail. I mean, you provide a lot of detail on the dexes. I should get some more detail on the projects I suggested.
Well, I think we should work together as well, like rather than just working on our own and then revealing it every month. I think maybe we should try and work out some kind of, like, you attack one category, I attack another, or maybe like we could look at different aspects. Like one could do fundamental research, one could do like focus more on charting or tokenomics, or I don't know how exactly it'd work, but
well, we can discuss.
I think we should definitely get our heads together when we're doing this.
Yeah, that's it. And I think it's not. You know, I'm trying to develop a team online as well, just of like-minded people who are doing the same.
Yeah.
Yeah, and absolutely, we've got our own little micro team, and that's, you know, we've got a few others that we're building. I mean, eventually, with 3 Lines Crypto with Will, we've built this Discord, and we're basically just about to release it for free for people, which is going to be like a platform to, like, you know, to talk about all these ideas and get them going.
Yeah.
So I'm planning on that's going to come fairly soon. It's basically built. I'm going to speak to him tonight about it.
Yeah.
So I think over this next year, if we can get a load of people in there, you know, we're not going to charge anybody. We just really want it as a network where we can all discuss ideas. So, I mean, Twitter's pretty good, but it's like a private network then where we can do it, you know.
Yeah, yeah.
Do it there. So that'll come soon. Well, in the meantime, obviously, we'll just keep chatting as we normally do.
Yeah, sounds good. Sounds good.
Yeah, that was great.
Yeah, thanks for that, Cassini.
Yeah, you too, mate. And yeah, hopefully hear from you soon.
Yeah, for sure. Yeah, enjoy your ribeye.
Will do, mate.
Yeah, take care.
Take care, dude.